Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, May 17th, 2019 DecisionPoint show with your hosts, Carl and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. I'm sorry to say that my dad, Carl, is not going to be joining us today. His sister is in town, so I get to be solo today. So let's go ahead. I'm going to show you what we're going to go over here. We'll look at the broad market indexes, price relative with the S&P. I'll go over the weekly review of the scoreboard indexes, the DP indicators. Of course, we have to look at those. The big four, dollar, gold, oil, and bonds. I'm going to give you my thoughts on those in the weekly and in the daily time frame. And then for bonus today, I thought I would just go through our sector spiders and see where they stand as far as PMOs, OBV, that sort of thing. We can go through and see where some of the strength lies right now, and maybe that'll give us a little bit more indication of which direction to expect the market to be going in soon. All right, well, I'm going to start with the DecisionPoint scoreboard. This is actually the changes that happened last week. We did not get any new signals since last week, so I just left this board the way it is. We did end up seeing a new, and I don't have it on here, but we ended up with a neutral signal on materials. I did write about that on Tuesday, I believe, or no, Wednesday. It actually happened on Wednesday. So we got the neutral signal on XLB. And of course, last week we ended up with a sell on the energy ETF. So I think there's good news and bad news here. The good news is I would say that the aggressive sectors like discretionary and technology, those groups are performing okay. I mean, we still have those buy signals on them. The areas of the weakness we're seeing, healthcare is in that defensive sort of area. Materials and energy are sort of right in between, I would say, in more of a neutral market, whether they do bad or good. But at this point, we're not seeing anything as far as deterioration of those more aggressive sectors. Like I said, discretionary, technology, and industrials even. Some of those we would expect to see some more action, XLC maybe to the downside, but at this point it's looking pretty good. All right, so I'm going to go take us to look at some of our charts. So give me just a moment for that. All right. And I apologize, there is a little bit of white space on the screen for some of these charts, but not all of them. I'm trying to get them all set up for our new screen size, and just haven't gotten all the way there yet. All right, so let's start with the S&P price relative chart. As you can see, we're seeing the Nasdaq 100 technology has started to underperform the S&P 500, and typically you want to see it performing as well, if not better, than the S&P, because that usually is when you see these price rises to the upside. So seeing a little bit of failure here going on as far as price relative, seeing the Nasdaq sort of failing a little bit here is not the kind of news you want to see. OEX, honestly, it's been mostly sideways traveling with the market more than anything else. S&P 400, though, and 600 are now starting to really underperform, and they're getting ready to hit relative lows right now. Really need to see that turn back up. That, I think, would be a great indicator. You can see even when it just started to perform as well as the S&P at the beginning of April, you can see the difference. We had a very nice, strong rally. So we really need to start seeing participation in the mid caps and the small caps. All right, let's look at the broad market indexes right now, just their price charts. And, the main thing to notice is, like I said, S&P 400 not participating, hasn't even challenged its all-time high. And look at the S&P 600, certainly not coming close at all to challenging its all-time high. And, you'll note that at least the Dow came up and challenged the Nasdaq 100, of course, managed to beat out its all-time high, set new ones. So seeing this sort of weakness in the mid and small caps is still concerning for me. We need to see prices start to turn around. We need to start seeing a little bit more movement to the upside so that we can get these tops, these highs challenged. All right, next up, global markets. And Carl and I discussed it, and we believe viewers are correct. We need to use all ETFs, or we need to use only the price charts for these different countries because of the currency. That the currency exchange that is prevalent when you use the ETF. You have to worry about that or pay attention to it when you're looking at the price charts. The currency, the dollar to the currency that we're looking at. So anyway, I added them all to make them the same. And in doing so, you can see that the Canadian ETF, we did get a little bit of a breakout from the declining trend, or as Carl and I have been looking at it as the bear market. We're not getting from those tops. We haven't seen a whole lot of breakout. We got a little bit here in Canada. Germany's actually now gotten out of that declining tops trend line and working its way out of its bear market. UK, not there yet. In fact, moving lower. And you'll notice Japan and India also having those same problems. And of course, China is still technically in a bear market from its 2018 high. All right, let's go through the scoreboard indexes for you. On all of them, I'm looking pretty much at rising wedges. We have been executed. In the case of the Dow, I thought we might see it move a bit lower than this, but it didn't. We ended up getting that bounce off of that short-term low. I think that is encouraging. We can see that price is trying to make its way back up into that rising trend that formed the bottom of that wedge. I think we may have seen the execution of the wedge. At this point, I'm going to be watching to see what happens as far as the rising trend. With this bottom, I'm not so sure where we're going to go with this, but I'm looking for price to try and get up here and back into that rising trend. Notice that with price below the 20 and 50-day EMAs, the Dow is vulnerable to an intermediate term trend model neutral signal. If we get the 20 crossing below the 50-day EMA, that's what would trigger it. The crossover would be occurring above the 200-day EMA, which again is why it would be a neutral signal and not a sell signal. Looking at the weekly chart for the Dow. All righty, here we are. PMO is topping on a lot of our index charts right now. I think all of them right now, actually, but we'll go ahead and peek and make sure I'm not speaking out of turn. We broke down below this rising trend. I'm not putting too much emphasis on this because, of course, we did have the huge breakdown with the bear market. So if you mark the rising trend off of that bear market low, I mean, there's further we could fall here. I would be looking, if we're really going to keep this up, if we're really going to be looking at a correction here, you know, we could be seeing prices come down and challenge the lows that we had back here in 2018 for the Dow. So the weekly chart's not looking that great, but honestly, when you think about where we came from on Monday, you know, a 0.7% decline for the week isn't horrible. Oops, I don't want that one. All right, Nasdaq. Let's take a peek at this. So you can see we came down and tested some support. I had it marked, gosh, I guess off of this low back here and this one over here. Kind of mimics the low from here. I wanted to give you an idea of some of that support level. And lo and behold, I mean, we actually ended up getting a bounce off of that. And we've now made it into the next area above the 50-day EMA and above the top we had back here in March. So, you know, the NASDAQ technology does look like it is ready to perform. We've already seen it on that price relative chart. It is starting to perform. Well, wait a minute. The NASDAQ is starting to underperform. So we need it to start performing better. I didn't want to speak out of turn here. All right, the weekly chart for the Nasdaq 100 PMO topping. Like I said, you're going to see that on these scoreboard indexes. You could. My dad and I talked about it as far as if you really wanted to get really bearish here, you could be looking at double tops here in some of these weekly charts. Obviously the confirmation line is really, really far down there. I don't know that we'll actually execute something like this, but we could certainly see price move lower, test this rising trend before things get better. I would be watching this PMO very closely on the weekly chart. And of course, watching lots of Market Watchers live in the mornings or in the afternoon. All right, OEX, S&P 100, bearish rising wedge. It executed. It pretty much went just below the target I had set for it based on the measurement. And now we are starting to head back up. Price is above the 50-day EMA. This is what we want to see, but the 20-day is still posing a bit of a problem right now. All right, here we are, weekly chart. PMO is topping, just like on all the others, and a breakdown from that very steep rising trend. Came down, like I said, we touched below this area of support on these tops, but we have bounced back so far. On the weekly chart, that's not a set bottom. We'll have to see if that materializes as a good reversal point. All right, S&P 500, the chart we always wait for. All right, so I had marked the bearish ascending wedge. I did the measurement from the back of the pattern, added it to the breakout or the breakdown point, and that gave me this as the downside target because it was a drop the same amount as in the back end. And interestingly, it pretty much hit it and turned right back up. But of course, that does coincide as well with these tops back here in October and November. So that was a strong support area. It needed to hold, and it did. OBV is starting to improve a bit here. So I'm going to be watching that closely as well and reporting back to you. Weekly chart for the S&P, topping PMO, steep rising trend broken as of last week, and then support at the top back here from 2018 has also been broken. But 2800 seems to be holding along these tops and along the tops back here. This is a pretty strong area of support. If we break down from that, this is going to become a bit ugly. All right, the ultra short-term indicators, I have not seen the results of these just yet. Oh my goodness. Let's go ahead and annotate. So we'll bring down, this is still somewhat climactic as far as new highs go. We did see a slight increase in new lows on this down day. But what I'm looking at here are these particular readings on the advances and declines as far as volume and price. And I would say this is somewhat climactic. It's certainly elevated, but with the VIX sitting right there on its average, I wouldn't read this as a climactic downside initiation. I wouldn't read it really as a selling exhaustion or buying exhaustion, because we are still seeing the rise into the Bollinger Band. What does have me a little bit concerned is I would like to see the VIX start to rise above that average in the middle of the Bollinger Band. And we haven't seen that yet. And typically when you're in a bear market situation here, you're going to see a lot of oscillation below that average. You can see right here where it was particularly clear. So looking for better numbers on the VIX still. I think there's some climactic activity here, but not a whole lot. Not enough. All right, short-term indicators. I wrote about these on Tuesday. I wrote about them this week, so you'll want to take a peek at this. I might have mentioned it as well in the DP alert on Wednesday. But what I'm looking for on these indicators, it is great to see them bottom like this and spike up. When I was writing about it before, neither had crossed above the zero line. We want to see that because you want to see that oscillation above the zero line. That typically means things are going the right direction. So I really wanted to see this continue upward into that zone. It moved up in that zone, but today we kind of ticked downward. So hopefully we can get these indicators to continue moving higher. If we go up to challenge the all-time high, obviously we're going to see that move to the upside above that line. It's just really struggling to get back up in there. And while I normally would look at a rising short-term indicator like this as very bullish out of oversold, I'm just treating it with a little bit more caution or grain of salt, just because of the fact that we haven't got a serious stand here above the zero line. Intermediate term indicators, not too much more to say about these. They are starting to struggle. They looked pretty good last week. We were seeing them rise, and now after today, they have immediately begun to turn downward, and they're not usually that responsive. So that does kind of concern me as well here. And we have had this negative divergence in play for quite some time. I suspect this was the working out of that negative divergence, that decline we already had. Would like to keep these indicators above the zero line. It's encouraging that they were trying to turn up, but it's a little bit discouraging that they're flattening out again. All right, let's move on to the dollar, big four. And I've been watching, of course, Carl and I have both been watching this rising trend channel. I have added a rising wedge in here because I noted that with that low that got set before it. Normally, and I still think the dollar could do well. I mean, if you're in a rising trend channel, you want it to test the top and the bottom. And usually, to me, if you don't test the bottom like this, that tells me that there's some strength there. Which is why we're still seeing that rise. But now it's starting to, we're starting to see that wedge. And so the next time down, I might be a little bit more concerned. But it still can remain in that rising trend, even if it goes down to the 26 level. And looking at the bigger picture, PMO is on a buy signal on the weekly chart. We did manage to get above that top back here in 2015, and it does look like we will challenge the high we had back in 2016-17. Gold, I've moved more bullish. Of course, today's action isn't really that great for if you're bullish gold, but I was looking at this falling wedge, which is a bullish pattern, and we got the execution. It was holding above that declining tops. We didn't get a decisive breakout. The PMO was on a buy signal. Everything was going in the right direction. And, with gold and the dollar, things can change very quickly. And right now in the short term, it has. I'm not going to give up on this falling wedge execute. I'm not going to give up on the dollar, on the gold breaking out. We still have really high discounts. That's bearish sentiment, which means that's bullish for gold. But this top below the zero line does have me very concerned, and seeing this immediate decline of the scooter, and that's concerning. The correlation also is starting to, we were very decoupled. It was very decoupled from the dollar, meaning it could just go any direction it wanted without being that affected by what happened to the dollar. But now we're starting to see it start to have that reverse correlation again, meaning if the dollar is going to do well, then gold is going to have some tough time ahead. But you saw that rising wedge on the dollar. Hopefully we'll be setting that up nicely. All right, on the gold weekly chart, it's a tale of two stories. We have again, very high discount rates, which means very bearish sentiment out there. That's good for price, but we have a PMO sell signal. All right, but we have a flag, which is bullish. The flag I thought would execute this week with that breakout, but it just didn't quite do that. And now I'm going to be a little bit more, I'm going to pay a little bit more attention to this decline. If it starts to really stretch down and decline further, then the flag, I think, is pretty much out of the question. I like to see I don't like to see the flag part get so long that it starts testing the bottom of the flagpole. That doesn't speak well for the pattern. All right, USO, really not much to say, kind of in a trading zone. You can see WTIC. Really, we're going to be looking at between $60, $67, $68, I think, for quite some time. It looks like we're just flattening out. PMO is completely flat, no momentum in either direction, so I'm pretty neutral on oil right now. And as far as the weekly chart, we're on the buy signal, had a breakout. Looks like we're forming a flag here. So there is some potential. I just don't think we're quite there based on that daily chart to get the breakout. Everything's just too flat. TLT has come up and is challenging the highs from March, and actually this week did get above it. Actually looks like today was a breakout above that, but it doesn't appear that we closed, well, we closed low. No, we closed a little bit higher from yesterday, but we're not getting a great big breakout just yet. But look at the price hanging right above that 5-day EMA, that very fast EMA, and its price is really hanging in there. So I'm not so sure if this resistance does end up holding, I wouldn't look for much of a pullback. I would still be looking for the breakout eventually. PMO is still rising nicely. All right, so I thought I would look at the S&P spiders for the end of the show. To give you a feel for what I'm looking at as far as DecisionPoint goes. I'm going to start with XLB, not just because it's alphabetically first, but because we did get that new intermediate term trend model neutral signal back here. Let me get this lined up better. There we go. The 20 crossed below the 50 while it was above the 200, and that's a neutral. Had the negative crossover occurred below the 200, then we'd be on a sell. PMO is now below zero, still declining. It's decelerating slightly, but there's just nothing here that looks that positive to me for materials. You know, even if we get up here and test this resistance, and if we start to fall or falter again, I would be looking at sort of a complex head and shoulders forming. Of course, this is really early, and we don't consider a pattern to be actually the pattern until it executes, but it's something I'm paying attention to and watching, and that you may want to as well. I'm just going to click here real quick and we can look at the weekly chart for materials. $54 here for XLB is very important when you look back here in 2018 at that low, and we are dropping below that. So where is the next area of support? Well, I would have to go all the way down here at 48 for the next area of really strong support. That doesn't mean we can't turn back up here in between, but it does not look good. PMO is topped. All right, XLC. Of course, it's a newer sector, so this is all data that was kind of back. We calculated it based on the components, but of course we don't have the OHLC bars for that. But by putting that back data in, we were able to calculate a PMO. And, you know, that's the kind of thing you want to be able to do, obviously. This, you know, XLC has been in a really deep decline here, very steep. And so we got the breakout, which isn't a surprise to me, really. You can't, I mean, just like with the uptrends, you generally can't maintain those steep trend lines for too long. So I was expecting to see some sort of a breakout. It'll be interesting to see if this turns out to be the top, and I can change the declining trend here. But right now it is broken out of that declining trend, which is positive. PMO is trying to move positive as well. Okay. XLE, remember this has two sell signals going, an intermediate term trend model sell. That crossover occurred below the 200-day EMA. And, you know, of course, it came in and we started to see a little bit of consolidation and an attempt to set a bottom on this area of support. Matches up, of course, with that March low, and you can look on back further. You know, it's holding. The PMO is turning the right direction. The scooter is starting to turn the right direction. OBV is it's been rising and price has really been steady. So I think that this is a good indication that we might get some more follow through here with energy, but overall it's still a pretty weak group. Financials is the interesting one to me right now. I have the PMO sell signal, and it is moving lower, but we've started to see some of those industry groups within the financial sector starting to improve somewhat. And also, I really am glad it stopped here on the 200-day EMA. I would like it to continue higher. This looks pretty much like a reverse head and shoulders here, and if we can get back up here, well, actually, the neckline would be right about here at 27.20, pretty much right where we're sitting right now. Like to see that breakout and that move to the upside to get us back above. But I think there's potential here for XLF. It's just not quite there yet. All right, XLI, PMO is in decline. Industrials have been suffering. Just look at the Dow, pretty easy to know and tell. Looks like we're getting ready to come back down and test that low. But, there's room for it to come up and test resistance as well. The 50-day EMA, though, finding that to be difficult, price having difficulty with that, I'm not looking for it to come up just yet. To test resistance. I think we're going to be looking at the industrials moving a bit lower here again. XOK, this is where we wanted to see some improvement. Nice rally off of the bottom that we got last week. And the PMO, though, is still in deep decline. Yet the scooter is still pretty high. We got this pullback after a really strong breakout. We're attempting to make a breakout above that top. I think we're going to find some success here. It just might not be for a little bit longer because the PMO is still really pulling itself down toward that zero line. XLP, we have a few minutes. And I'll just whip right on through. XLP obviously been a great performer. If you have any of those staple stocks in your portfolio, you've probably found that they've been pretty successful for you, being in that defensive mode. We got the breakout above that top. Certainly not in a bear market anymore, and continuing the rise to the upside, just about ready for a PMO buy signal. So I'm still looking for good things out of the consumer staples area. XLRE, another defensive sector, just got a PMO buy signal, and you're seeing that overhead resistance at the top back here in April is being challenged. So it looks like XLRE and real estate are headed to do some good things right now. XLU utilities, obviously a great performer out of December and certainly didn't get hit as hard. But as you can see, we've got a consolidation zone right now. We're at the top of that trading range. The PMO buy signal gives me some hope that we're going to get the breakout. I would expect the breakout here, especially if the market continues to move as softly as it has. And healthcare, and then I'll finish off here. Declining trend, PMO buy signal on the way. And then finally, XLY. Really deep decline here, but got back above the 50. PMO is still in decline though, so discretionary is still kind of hurting right now. We need to see it do a lot better. All right, that pretty much is it. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. The link is right there below the viewer. We love to get your feedback and hear what you think of the Decision Point show, and certainly suggestions as to what you might want to see coming up on the next show. As a quick reminder, Decision Point airs Fridays at 4:30 p.m. Eastern, 1:30 p.m. Pacific. Have a very good weekend, everybody, and we'll see you back here next Friday. Happy trading.